In this video, I'll be talking about the document that just got released by the National Bureau of Economic Research. Now, as we know that we're in a recession. Now, we don't always need all the data to back that up based on the unemployment rate, based on the fact that people were obviously not going to work and unable to make money, and that affected consumer spending, and we already knew we were in a recession. Plus, we also experienced a decline in the stock market. However, the NBER will often have to do their due diligence and do their own research and back it up with all this data, which is great, and that's what they've done. And they have decided to state that we are in a recession, which started in February. According to the NBER, they released a document which was dated towards the end of May, and this document basically stated the impact of the shutdown on the economy. Now, some of the things that they mentioned in this data was the fact that the shutdown in the economy obviously led to higher unemployment rates and also led to a decrease in consumer spending. And due to the fear and panic in most people, they were shifting their investments from equities into safe alternatives like cash. So the two indicators that they used in determining the recession that we're in right now are unemployment rate and the GDP. Now, in this document, it was actually stated that, generally recessions could last long, but in this situation, it could also be short. So are we already in a recovery phase? In the recent 2 weeks, we can already tell that the economy has started opening up again, and that is reflected in the stock market. As you can tell, the stock market is making steady recovery, and in fact, is actually happening faster than we anticipated. And that is actually making investors panic. Now, the truth is, we all know that this isn't a real recovery because we all know that the performance of the stock market right now doesn't really reflect what is happening in each company or sector of the economy. And that is the reason why we are actually very worried, because what if we go into a recession again? Because remember, they said it could either be a V shape or it could be a W shape, and that often could happen anytime. So what are the measures that we can take to prevent us from making irrational decisions and trying to go into cash mode, or like some other people did, they went into cash mode. And by going into cash mode, you've actually missed out on this recovery. Like I always say, timing the market is always the wrong move for a loser, because if you try to time the market, you would often get it wrong. And that is exactly what is happening right now. So the question is, what are we supposed to do as an investor trying to make sure that our money is safe and we can maximize the gains on it? Well, the truth is, every investment you make should be based on your risk tolerance. You need to look at your situation and face what you are doing. Because if you often react to what the economy is saying, or what this analyst is saying, or what the economy is trying to do, you would often get it wrong. So there are two things that could happen going forward, especially with the stock market. The first one is, well, it could stay level and keep going higher gradually, or it could go back into a decline. Now, how low is it going to get? I don't think it's going to go that far, especially if the recovery continues as we are experiencing. But by the end of this quarter, the stock market will go into a very volatile mode, because these earnings will start coming out, and I have to tell you that it's going to send the stock market into a big decline or an upswing. Here are my reasons why I think the stock market will be very volatile during this earnings report. The first one is this. You got to remember that so many companies that are making tons of money during this period, and these companies will definitely report profits. However, there's so many other companies that are actually losing tons of money as well, and this will also affect the stock market. So I would want to prepare you guys and prepare your minds to know that the stock market will be very volatile. But there's a good news. One of the good news that I think is coming our way is this. If the technology sector has really performed in general very well during this period, there's a chance that the stock market will go in their favor. And that is because we all know that the technology sector holds a huge portion of the S&P 500 in terms of the total assets within that index itself. Now, we all know that the stock market is very volatile and could often change directions anytime. And that's why I don't like making predictions. And I'm not trying to predict what's going to happen in any way, but I'm just trying to share my own opinion of what I think is going on or what could happen in the future. If you're going to invest based on your own risk tolerance and based on your own situation. If you think you are too exposed in the stock sector, then maybe this is the time for you to start rebalancing and reallocating your assets. However, if you think you have a long time to ride out any decline in the stock market, then maybe you might be in a good position to actually hold on and increase your position. It all depends. Now, as long as we're in a recession, we all need to tread cautiously because every investor at this moment is in panic mode. Although they've moved away from their cash modes and trying to go back in the stock market, which is why the stock market is going higher now, this isn't reality. And I believe that eventually the reality is going to set in, and it's going to probably start revealing itself when those earnings come into view. But in the meantime, I hope that you stay true to yourself and invest based on your own tolerance and based on your own understanding and how you feel comfortable investing. I wish you good luck, and I hope to see you in my next video. So on my channel, I talk about saving money, investing money, and how you can improve your finances through creating passive income. So if you're interested in subjects like that, please consider subscribing to the channel. And also, if you find value in this video, please consider giving this video a thumbs up.